Yeah, can you hear me?
Yeah, I got you. Okay. All right. I wasn't sure if you were hearing me.
Wait, I'm confused. Where are you?
Do you have me? I'm on 4.
Oh, all right. Can you hear me now?
Yes, yes. You
What
got
the
me? Okay.
Yeah,
All
what
right,
the
all right,
hell?
all right, all right, all right. We're live, so okay.
That was what the
I know. I was like,
All right, yeah, okay, so it's 4.
yep.
Th- wow.
All right.
Should have made the coffee. Dang it. Yeah, it was weird because I had you on 1 and I thought we were talking, but it must have, I don't know. Whatevs. We're good
Whatever.
now.
We're good.
All right, 45 seconds.
All right.
Why do they always have so much trouble saying meteorologist? Like, I know you can't hear what
Yeah.
they just said, but like, nobody, people always have trouble saying meteorologist.
Dude, everybody doesn't have that education you got, bro. Cut some people some slack, man.
Meteorologist. the,
We-
the cloud dude.
weather dude.
All right, here we go.
What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. And I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And that's right, this is your home show where for 10 plus years we've been providing education and options on what is or will be your largest investment and most valuable asset, and that is your home. Hey, if you're new to the show, welcome to the Gumbo Nation. We're glad to have you with us. We think you'll enjoy the ride. And congratulations, this is going to be my greatest show ever until next week's. So you're going to be part of something historical, legendary. You're going to be part of something legendary. So if you want to join the show, 504-260-0995, or you could shoot an email to info@mortgagegumbo.com, or the home away from the show's mortgagegumbo.com. Got Jazz Fest going on, festivals going on, good time. Weather sort of been cooperating a little bit, so good there. Dave, have you a Jazz Fest guy or what?
Nope, absolutely not. I do
No?
not like it whatsoever.
Yeah, I'm trying to go. I may be going this evening with some buddy. I think Pearl Jam or something like that. So
Yeah, that Pearl Jam's today. But yeah, like I went in high school. I'd skip school to go, and then I was just like,
yeah,
I'll actually just go to school now.
right. That's so that gives you an idea on Dave's thoughts on that. Yeah, I mean it's something that it's cool. It's a lot of hassle to get to it, man. It's a commitment, right? Just to get there and get
Yeah,
from and
yeah,
all that.
and just and then moving around all those people. And then they don't throw anything from the stage, so it's not like a Mardi Gras thing, you know.
Right. That's true. That's true. So got that going on. So it's festival season, all that. So good stuff there. On the show today, we're going to be talking about it, and I know I continue to talk about it, and I'm getting because folks, look, the topics of this show come pretty easily. You know, it's based on the questions that I get. It's based on what I see every day in dealing with you, the consumer. And what I try to share is, things that we can see that are obstacles, upcoming concerns, fears, wins. You know, how do we win? How to overcome certain things, obviously. Um, but this buy now, pay later, it's becoming a big deal, a really, really, really big deal. So we're going to discuss that because they're coming to a credit bureau near you, and not sure if that's something you're going to want. Debt, excuse me, debt management. This I'm amazed at these articles that I'm seeing that are being put out by CBS News. So we're going to talk about that because, again, if you read the headlines, you think they're selling you on, hey, how to manage your debt. This is great. Basically, what it is it's ads to basically let go of all your debt. And so we're gonna touch on that. And first time home buyer tips. We're going to get into that. Not just, hey, oh, here's how you budget, know what programs and all that. That's simple stuff. That's common stuff. But we'll dig into the weeds a little bit and just kind of dive in. And, again, these are things that I see all the time. So I want to help you as we're moving forward, right? Because people get, with the rates being in the sixes now, people get a little bit excited. So I want to make sure that you're staying ahead of the game. And the BLS, they got us again, so to speak, when it comes to mortgage rates. So we'll talk about that as well. But want to start with, hey, you might be considered middle to upper class. Saw this article this week, and the minimum salary required to be upper class in the 19 poorest states. Well, I'm not going to go through all, but I'm going to go through where I do a lot of my business at. And, all 19, these states that I work in happen to be on the poorest 19. So, but hey, we thrive in this, and that's what we're here for, to help you out. So, Mississippi, you are upper middle class if you make $85,424. The median household income in Mississippi is $54,915. So let's go. Get to $85,424, and you're going to be considered upper middle class. Alabama, median income, $62,000. Upper middle class, $96,487. Florida, median income, $71,000. Upper middle class, $111,000. See, a lot of you folks may be a lot richer than you think, at least status-wise. Maybe your status, you need to change that. Start feeling a little bit better about yourself. Tennessee, median household income, $67,097, $104,000 there. Texas, $76,000. And the income range for upper middle class in Texas is $118,000. Louisiana, of course, I saved, best for last, just because I live here. Love all the states we operate in and function in. Louisiana, median household income is right over $60,000, $60,023. So for you to be upper middle class in Louisiana, you're looking at $93,370. So, hey, maybe you're closer to being upper middle class than you think. The percentage of population under poverty in Louisiana is 18.9%. 18.9%. Gosh, when you read it that way, right, it's almost like if you round up, it's 1 out of 5. You're like, all right, hey, 1 out of 5 people in the state of Louisiana is in poverty. But you could spin it and go, hey, 81.1% are living above the poverty line in Louisiana. You see why I talk about headlines, right? But $93,370 in the state of Louisiana, and you are considered upper middle class. So I saw this article, and I thought it was pretty neat because, I help a lot of people out, and when you start looking at couples and combined incomes and all that, a lot of folks are over this number. And I was like, man, that's pretty good when you start looking at, all right, hey, how do you status? How do you feel about yourself? And, hey, so good for you. If you're above that, hey, your status, I want you to walk around, puff your chest out today, and feel a little bit better about things. You're doing good. You're doing good there. So So that's that part there. Look, here's something I want to touch on. Already seeing it, and we're going to talk a little bit more about this in the coming weeks after it's live. But Gumbo Nation, again, I'm seeing this on credit reports. But student loan, for those of you who held out hope and were hoping the forgiveness was coming, don't make your payments. You're not going to have to. All this. We've already started seeing it, so I don't know why they put this date on it. But student loan payment change, what it means for borrowers' credit scores. Look, May 5th, which is Cinco de Mayo, which is Monday. So I'm sure a lot of folks be out getting their margaritas on, getting their tacos on. Millions of Americans with federal student loans debt are facing renewed pressure as changes to loan servicing policies could soon begin impacting credit scores. And this is why I'm bringing this up. After nearly a 3-year freeze on mandatory payments during COVID-19 pandemic, the U.S. Department of Education is phasing out its lenient approach to missed payments. This key policy shift is set to begin early May. Okay? Why it matters. This change comes under the Trump administration's evolving approach to student loan debt, which has included both an emphasis on personal responsibility and the enforcement of repayment obligations. And we've talked about this. And for folks who buy, we've told you for years how we get around this. And you know, before COVID-19, there's income-based plans. But depending on what loan type, for a conventional loan, hey, it's a 0.5% or 1%, depending on Fannie or Freddie. If you're going with a government loan, it's a 0.5% of your student loan balance, right? So if you've got a $4,000, 1% would be 40, half would be $20. That's what we're looking at. We have to count, okay? So when we're doing this, and so let me just kind of keep going through this article. As protections implemented during the pandemic era expire, borrowers who fell behind on payments could soon see their delinquencies reflected on credit reports. Guys, it's not soon. It's happening. It's happening. And as these start to report, what you're also going to have, too, is let's say that interest has been accruing, right? And take it from somebody like me who let the interest accrue because, hey, I had sisters in school, so the student loans allowed me to let that interest. The interest was more than what I borrowed to go to school. So that continues to accrue, and this shift may carry long-term financial consequences. Until now, missed payments have not been reported on credit bureaus during this on-ramp period, buffer instituted after payments resumed in October of 25. The grace period officially ends Monday, May 5th, after which loan services will begin reporting missed payments to credit agencies again. Why is this important? Because this could potentially lower credit scores on delinquent borrowers. So it's a little bit of a catch-22 here on my thoughts on this, okay? Because I see this and I deal with this. And it's a fine line between irresponsibility and responsibility, right? If somebody's telling you you don't have to pay something, it's who was it? Wimpy and Popeye, I'll gladly pay you tomorrow for a hamburger today. It's hard for you to go, all right, I'm going to set this aside for when that day comes, right? Life goes on. Life happens. These things were being waived because of the pandemic, which caused strain. We know what the economy's been like. We know what the struggles have been the last couple years. So, you know, for this to all of a sudden that is going to be hitting credit bureaus, it's easy to go, well, hey, you should have prepared better, this and that. That's not necessarily my thought. My thought is kind of like, you know, we knew this was coming. You know, is there going to be maybe, and I don't know, I don't have the student loans, but I know, what are you doing to try and work through the defaults? Is there some sort of relief that way? You know, I don't know what the answer is. I don't. But what's unfortunate is I know this is going to have some impact on folks that are out there because all of a sudden these things are going to report. And like I said, I'm seeing it. I'm already seeing it on bureaus. But with that being said, we've always had to deal with student loans. We have a way to put that into your budget. We have a way to work through that. And we also have ways, because at Mortgage Gumbo, credit doesn't intimidate us. We have ways to work through. We don't judge you by a credit score. I closed 3 loans this week. This week alone, helped 3 new people purchase a home, 2 with credit under a 600. And another one with a credit right over 600. And last week did one with a VA loan, a 527. So it's, do you have the programs, and do you have somebody that's willing to work for you and help you work through it, not judge you by a credit score. And that's why what we've been saying, and that's what separates us, and that's why we come on here every week just trying to educate you, right? The elevator speech. We're providing education and options for you. That is what we're trying to do. We're not going to judge you by a credit score. So keep that in mind. These student loans, you know, you're getting those emails. You're ignoring them. Go into your search bar and put student loan. Some of them, look, working with a client right now. You know, had to go back all the way into October, find a search bar, not reporting on credit bureau, had no idea where it even went, and we had to go find it. And we tell you, credit bureaus have 25% errors on them, and a lot of this is going to be some misreporting. So be prepared. You can't ignore this. It's like the tax bill. You got to pay it. So all those emails you've been getting, that stuff coming in the mail, I'll deal with that later, I'll deal with that later. Now the can has been kicked down the road. We've been talking about this for years. And I'm not here to go, told you so. Not here to go, well, you should have been saving all that time. No. But it's here now, so let's take it on. Let's roll up our sleeves. Let's work together to figure out what we got to do to work through this. Because guess what? For some of you who bought a house and now you're excited and rates are starting to go down and you're looking to refinance, what impact is this going to have on you getting refinanced? What impact is it going to have on your credit score? So let's attack that. Let's not ignore it. Stick around. We got a ton of show. We're data-driven, not headline-driven. That's why you trust us. Go check out Google reviews. Go Google Mortgage Gumbo. Go see what other people are saying. We are here for you. That is what we do. So don't go anywhere. Stick around. On the other side of the break, we're going to talk about this buy now, pay later, debt management stuff. And then first-time home buyers, going to give you some tips to make sure that you are prepped and ready to go and things that you may not be thinking about. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995. see you smile. Now you see why I do radio? Man, this is good music here, huh?
Baby girl, get on the
You ain't lying, man. Dude. Don't even want to talk about spin the bottle and stuff like that. This is a
right.
This is a professional show. We don't even want to get into that stuff. Man, good job, Dave. You on it this morning. You must be geeked out. What you got? Nerd Fest or something going on, man?
St. Tammany Collectors Con over there at the Castine Center today and tomorrow, May 3rd and 4th, open from 10 to 5 both days. Come on out and see us, baby.
Tell me, this is why we're the world we live in. You can't tell me there's not somebody or something for everybody. I mean, the excitement in your voice for that.
It's like the cheap, affordable con, not like the whole Wizard World big Comic Cons thing. So it's all local people, and you just kind of walk around. It's a lot of fun, dude.
Yeah, it's low-keyed. It's not try-hards, right? You know what I mean? And
right. I mean, it's not an all-day event. You can just kind of go in, hang out, look around for stuff, and then just roll on out.
That's awesome, bro. So go see Dave DeCorbier.
That's the Castine Center for St. Tammany Collectors Con.
And hey, Dave is behind the scenes, and we don't let him. You don't get to see him that much because he's like me. He's an Adonis, and there's too much sexiness. And that's why we do radio. We have faces for radio. But congrats, man, this week on 12 years, bro.
Dude,
tell everybody
years
about.
I've been doing the Week in Geek. Started at that little dinky station down the dial. And then we went over to Sports 1280, and now we're on the mothership, the flagship News Talk 99.5 WRNO.
And tell them when they can hear you, bro.
Sundays at 7 o'clock, and you can listen on that free iHeartRadio app. Take us anywhere you want to go, and you can listen to us on the go, baby.
There you go, man. There you go. All right, so congrats on 12 years, man. So I'm a year behind you. I'll be 11 in September. So
who knew, dude? And congrats to you. I mean, like we've been just rolling along, steadily moving, keeping the dial going.
We like roaches, bro. You can't kill us, dude. You know what I'm saying? You just can't. All right, let's get into. We had a lot of data this week. Lots of data came out. So. Look, we talk about, hey, what data is going to come out to adjust, and next week Powell comes on, the Fed. Will they make a move? Probably not. Did June's move that they were talking about get pushed back? Maybe so. We'll talk about that in a second as well. So personal spending. People continue to spend. So and we talk about this. Now, we know here because y'all listen to Mortgage Gumbo and you're educated, so we know here that the personal spending that's going on is on credit cards. We know because they're maxed out, right? But personal spending up month over month from 0.5% to 0.7%, up 0.2. Personal income. Now, this is a win. Up 0.5% month over month, up from 0.4%. Anytime I can have a little bit more money, I'll take that. Now, you spent 0.2 more, so what does that tell you? What do you think happened to your savings rate? If you went up spending 0.2, how much do you think your personal savings rate went down? Ding, ding, ding. That's right. So it went down from 4.1% to 3.9%. You can't save if you're spending. Okay? You can't save if you're spending. GDP this week down 0.3%. That's the first time. First time since 2021 that the GDP is down. I'm not going to get into GDP, all that. I'm not an economist. I can tell you about it. We talk off air. I don't want to put you to sleep. You're driving. So, Jerome Powell, is that enough? Or is that going to be one of your one-offs? Right? So, what are your thoughts there, Jerome? But again, or is he going to go, well, personal spending, people are still spending. ADP came out, and then we're going to get into the BLS/BS because they got us again. ADP, 62,000 jobs versus 115. Small businesses up 11,000. Medium businesses up 40,000. Those two areas there were huge and big increases. And this is what this administration's trying to pitch. This is your people on the corners. This is your local. When we say buy low, small, medium, these are those folks. Largest was up 12,000. Okay? Where is the hiring? Leisure and hospitality up 27,000. Trade, transportation, utilities up 21,000. Now, side note here, not being political, will we see that? Where's that going to go when these tariffs kick in? Right? All these transportation, what's going to happen there? I don't know. We'll get to more of that in a sec. Education and health services was down 23,000. Now, was that Doge cuts? Maybe so. Job stayers, 4.5%, down 4.5%, 4.6%. That's same there. What that basically means is, it's not like in 20 and 21 and COVID when all that money was going out, right? You had a job here today, and yesterday you were somewhere else. Job switchers, 6.9% from 6.7%. So a low tick, right? Some of these smaller businesses hiring, maybe they're offering a little bit more. They're feeling a little bit better about things. We'll see. We'll see. See, these reports are so conflicting. So conflicting. Refinance applications up 42% year over year. And I can tell you, the folks I'm helping, saving them hundreds, thousands, and thousands, not hundreds of thousands, hundreds and thousands of dollars a month. In April, 2 of the refinances we did, one was $1,500, another was $2,300 a month in savings. So your 3.5 you're sitting on, or your 3%? Right? What are we doing? Don't wear it like a badge of honor. Pending home sales. Remember last month came on here and they said, oh, it's negative. It's negative. Shows you about rates, right? And why I tell you all the time you can't time the market. But pending home sales is up 6.1%. That's very strong. Very, very strong. But again, Gumbo Nation, it's impossible to try and time the market. It's impossible. All right, I'm going to wait once it hits this, because with the data coming on, with the market we're in is just, I was talking to some friends of mine that are lenders, and it's like, it's why, again, the strong survive. That's why it's so important. That's why Mortgage Gumbo works, and the Gumbo Nation, why y'all the best, and you continue to send family, friends, aunts, uncles, relatives, nieces, nephews, brothers, sisters, cousins, co-workers, friends, is because the strong survive here. And you need to have somebody that can get you in a program, somebody that when you're below a 600, don't throw you aside, like we alluded to earlier. Jobless claims, and this is, again, where the BLS, ADP had 62,000 jobs versus 115. Jobless claims went up 18,000 to 242,000 last week. Continuing claims went up 83,000 to 1.916 million. Okay? Meaning people still on continuing to get unemployment benefits. Yet unemployment stayed 4.2% because they use 0.1%, and that's a whole nother thing. But that stayed at 4.2%. So how? Right? Don't know. But BLS, remove the L. What do you get? Old BS. So outside of my awesome mom, Barbara Stein, that we call BS. You know what you get. BLS, remove that L. But they got us again. And the stage was set for rates to plummet, Gumbo Nation. But the headline, and look, this is where, again, it's a catch-22, right? Because for your 401ks and all that, All right, now they're showing it. We seeing the stock market rise. Remember, everything was gone to heck in a handbasket. Our 401ks were plummeting months ago. And look, you still got a ways to go to get this stuff back when the initial tariffs came back. But these jobless claims, it affects your treasuries. It affects so headline was 130K estimate, came in at 177,000. But keep in mind, this is the Bureau of Labor and Statistics. This is the same folks who were over 1.5 million in 23, now 2.5 million in 24, and overstating jobs. Remember, 2.5 million last year. And they're at it again. Because what you hear is the 177 versus 130. And look, that sent the stock market up. But that hurt mortgage rates. So in January of 25, they came out and their initial said was 143,000. They've now revised that down twice to 111,000. In February, they came out and said 151,000. Again, when rates were starting to go down. That's why we saw pending home sales go up. When rates were starting to go down, they said 151,000 jobs. This crushed rate momentum. They've now revised that twice to 102,000. Just last month in March, because we're talking about April's report, 228,000. That's already been revised. The first revision, 43,000. So in just the first quarter alone, they've already overstated jobs by 205,000 or 68,000 a month. And why does this matter? Because this is what's keeping the Fed from lowering rates. This is what's keeping that credit card debt elevated, right? Or your payments, I should say. And look, when the Fed lowers rates, your 22% on credit card interest going down to 20, it's not going to make a huge difference. But you know what? Let me determine what makes a difference in my life, in my household, in my budget. But what that does is by keeping that, it keeps rates down, because now what's happening is the job market, people go back into the stock market, right? So you saw the stock market going up. You see your 401ks going up, which is good. We're not poo-pooing on that. But they don't go high, they don't go running for 10-year the mortgage bonds, 10-year treasury bonds, which is where your mortgage-backed securities are. So that's why we saw rates were prime. This was going to be a nice report that we were hoping and considering was going to make a difference. Now, for my buyers, guess what? They were protected. None of mine are getting called going, well, hey, it's going to cost you more, because we protect them. Do you have a lender that's looking out for you? On the other side of the break, we're going to knock out Rate Watch, and we're going to get into a little buy now, pay later, and then get into tips for our first-time home buyers. We want you to be ready. These are things I see when people are calling. These are the mistakes that I am seeing. It's 8th grade, 9th grade. It's middle school dance radio right now. Get that coverage up. Get that courage up. Walk across. Grab that Kool-Aid out of her cup. Bring a straw. Sip with her. And ask her to dance. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. 504-260-0995.
nation far away. Come around and talk it over. So many things.
Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. The home away from the show is mortgagegumbo.com, or you can shoot an email to info@mortgagegumbo.com. Just Google Mortgage Gumbo. You can find us. Check us out. Go check out our Google reviews. Hey, if you like the show, go give us a review. Tell us how great you like it. You get your education, your option on. All right, let's get into our weekly segment we like to call Rewatch. All right, 30-year conventional. Last week was at 6.84. This week, 6.90. So not a lot of movement. Like I said, it was primed. It was heading in the right direction all week. You cannot time the market, Gumbo Nation. You can't do it. Don't try to do it. Right? And the pain of the rate going up by an eighth or a quarter is a lot worse than it going down by an eighth or a quarter. And it's not going to make that big of a difference. In 30 years, I've never lost a loan because of an eighth or of a quarter of a percent. Ever. Ever. And I won't let that happen to you either. So 30-year, 6.90. 15-year, 6.19. FHA, FHA, 6.28. 6.28. So that stayed pretty flat. Again, we tell you, we play in the field where they want us to play. You want to keep FHA rates down? Good. We're marrying a house and dating the rate still. We'll keep you in an FHA loan. That's fine. Jumbo, 7%. And VA, 6.30. 6.30. So that's actually hanging out really in about the same area. So, but it just gives you an idea, right? It gives you an idea. And we talk about a 0.25%, and you see the market and the rates, this. 5-month lows on April 5th, a 30 was at 6.60. 30 today's at 6.90. That sounds horrible. And we don't like it. And while it may have adjusted some of your buying power, we're just going to see where we're going to place different monies. We'll talk about that in a little bit. All right. Buy now, pay later. It's coming to a credit bureau near you. And I don't think that's good. I don't think it's good because, again, there's a reason why I keep bringing this up, because I'm seeing Affirm, Klarna, PayPal all over credit reports now. And they report when they pass due. Now, some of this reporting, maybe it'll be a positive for folks who maybe don't have established credit. Maybe it'll be a positive to help people maybe build their credit history. You know, instead of going out and getting that secured credit card debt, they'll use this. Maybe. But that maybe is the same people, because there's so few, that every year goes to that tax person and goes, hey, make sure I pay more. So it's far and few between. TransUnion becomes the latest bureau to include Affirm's pay over time product reported. PayPal says buy now, pay later users are now going to be reported. PayPal, buy now, pay later users spend 33% more and make 17% more transactions. $33% more transaction per PayPal's overall average of $69.53, the company said, per transaction. They also complete 17 more transactions than the average $59.40 per active account over the past 12 months. And this is the thing that, you know, Affirm, we talked about. So TransUnion reveals that 37% of buy now, pay later customers had at least 2 active loans at one point in time and skipped payments surged among young consumers. Let me tell you what skip payments means. Past due. Hey, I'm going to skip a payment. No, you're going to not pay it. That's a past due. No loan allows you to skip a payment. The upside for, we got a new term, credit builders, is consumers with limited or no credit histories may now factor and help out their credit report. So what I just told you about as I'm going through this article, I should have deemed it credit bill. Who knows? I was on to something. Too far ahead of myself. I'm not creative enough with terms. So now we got a new term. Go out and finance your burritos and your tacos and do it over 4 installments because it's credit building. Jeez, some Pete's. Oh, this is so hard to keep this on a family. This is why I need Mortgage Gumbo after dark. Because what I want to say, I mean, I'm being politically correct, but I mean, come on, Gumbo Nation. Come on. We got to sit down. We got to get this right. We got to slow down on this stuff. They're trying to sell this like it is a great thing because we are in a world where we want instant gratification. Lending Tree, 2,000 people surveyed on buy now, pay later. 50% said they used it. So you know it's more than that, right? Everybody lies about their numbers. 50% said they used it. Of that, 50% said, of those 50% that used it, 41% had past due payments or missed a payment. And here's what's even more concerning for me, Gumbo Nation. 33% said that they've used it to bridge the gap from paycheck to paycheck. So, Jeremy, old Jerome, what you think? You think it's transitory? Is it greed? What is it? And is that going to change? Is this something like the student loans where people are just, hey, this is great, and then all of a sudden you're going to wake up and this is going to be on your credit report? And now what? And especially younger folks, moms, dads, Gen Xers. What am I, Gen X? I mean, so whatever generation's under me, Z, Y, whatever it is, your kids that are now turning 18, 19, 20 years old, using this stuff, door dashing, Uber Eats, all this stuff, you got to sit them down. I can't be the one educating them on this down the road. Because at that point, a lot of times it's too late. And I love putting a square in a round hole. I love that. I do it for a living. I love doing what other lenders say we can't get it done, and I get it done. I love that. But this is kind of where we've got to sit folks down and go, hey, are you doing this? Keep an eye on this. Because everybody's bank of mom and dad it's just a gravy train. Here's a credit card. Use it at will. I'll pay it off. So if you're sure, just make sure that education is there. Read up on this stuff. It's horrible. It's horrible. And then you got these companies, and I'll get to it later, these CBS putting out articles. Hey, want to learn how to pursue debt forgiveness? Jeez, Pete's, man. That's a story for another time because I got to get to my main thing. All right, we're up against a break. You're listening to Mortgage Gumbo. Stick around. First-time home buyers. Going to give you some tips outside of, hey, get pre-approved, all that. We're going to talk about some things, just making sure that you're considering. These are mistakes and things that I'm seeing or wins that we're seeing that I want to make sure that you understand before you get out there and you go start looking to purchase that new home. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
To say that I was so wrong.
Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein. Hey, home away from the show. Go to mortgagegumbo.com. Appreciate a couple shout-outs. John, Jason, Mark, Bill, saying they appreciate the show. Mike, love listening. Love having
Do they
you
appreciate the music? That's what I need
Oh,
to know.
without a doubt, man. Absolutely. That's what they said. Tell Dave, keep it going. Loving it. All right. So what I want to talk about is, look, on this show, we're always giving tips. I don't want to say tricks. Well, we do tricks when it comes to credit and all that. We're going to touch on that just a tad. But we all sort of know, all right, hey, get your credit in order, get this, get that. But some things that I see, and I want to make sure, because this is what we run into, and I see this a lot. And number one is slow down. And you've waited. And not so. Some of you have been sitting on a sideline for years, but you're excited. You want to buy a house. But don't put the cart before the horse. And what I mean by that is making sure you're moving too fast. And this is where it's important for you to understand that you've got to speak to somebody. You've got to get a loan application. And you don't need a pre-qualification. You need a pre-approval. Because if you do move too fast, and again, I'm seeing this. This is why I'm bringing it up. Hey, I put an offer on a house. I listened to you on radio. I need you to help me out. And then they put in an offer on a $300,000 house, and they can't afford that. Or we've got to do some certain things to get them there. Or if they'd have known and got with me, could explain to the realtor or whoever they're speaking with on how they can win with getting closing costs and stuff like that. So, number one, you want to slow down. Because if not, it's going to lead to you buying more house than you can afford. And the one thing that everybody, and I will never get away from this because I know I'm going to be here when everybody else is gone. And that is because we're going to make sure that we are always helping you. And we understand at Mortgage Gumbo, what you can afford, what you're willing to pay is two different things. And it works both ways. Because I've got the person that makes $40,000 who wants a $500,000 house, and a person that makes a $500,000 who thinks they can't, they want a budget for $150,000. So it works both ways, and that's okay. But we want to make sure and understand this, Gumbo Nation. I cannot put you in a house that you cannot afford. I can't just go, yep, go get a $500,000 house, and then you're strapped. It's got to budget, okay? The other thing is being careless with credit. Every application, every client I speak to, when we speak to, whether we're taking the application over the phone, they go, hey, send me a link. I'll do it later on. But every client gets my 10 commandments. And if you want to copy those, shoot me an email to info@mortgagegumbo.com, and I'll get it to you. But you can't be careless with your credit. You cannot be. And that's going buy furniture. We'll get you to 10 commandments. So you got to make sure that you are not careless with your credit. Running up a credit card in the middle of the process. Right? Ignoring these student loans. These are things that I now know and have prepared my team on how we're going to handle this moving forward. A lot of you need to understand what are the upfront costs. Outside of we know we got to move. And that you can get, two Joes in a truck. You can, buddies, that's what you got friends for, right? Everybody doesn't have to get a moving company. But what are some of these other upfront costs? And while we don't require it, we recommend an inspection. And another upfront cost is going to be an appraisal. And I explained that to a client this week. Well, can't we just put that in a closing cost? Well, somebody's got to pay for it. And that is a contingency on your purchase agreement, is that you're going to buy it for the agreed price. So we got to see if that appraisal, I can only lend you on what it appraises for. So understanding upfront costs. And to piggyback off of that,
2 minutes.
It's also understanding that once you get into a house, you want to make sure that you've got some monthly savings, right? Because there's no calling the landlord to say, hey, the AC's not working. So you've got to have a little bit of backup there. Ask your lender about down payment assistance. Are there some programs out there? What's available? We've got a great down payment assistance program for first-time home buyers. If you qualify, you put up 1%, we'll match 2% up to a certain amount. And the last thing is we want to make sure for you, and again, these are just quick hits, but this is the questions that I deal with on a daily basis, and I want to share it with you. But it's understanding you don't need 20%. The times have changed. And I show people all the time how putting down less a lot of time gets you a cheaper rate. Not all the time, depending on the program. But you've worked hard. And we don't want to drain your savings. We don't want to drain your 401k. When you call me, I'm not going to go, hey, you got $50,000 in your 401k. Let's use all that as well. So instead of you qualifying for $225, now you get $350.
30.
That's not what we're going to do. We're not going to drain your savings. Visit MortgageGumbo.com. Go to SnapSendAndSave.com. Let's have a nice chat to find out what we need to do so you can enjoy the benefits of home ownership and start building your wealth.
10.
Till next week, Gumbo Nation. Keep stirring the pot.